The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 24th, the marvelous Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on magical, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day out here with a rally. To be expected, we saw that spot VIX index on Friday close, have a one-day rate of change below minus 10%. We discussed that. We said if we got that, that was an initiation to higher price. What are we seeing today? An initiation to higher price. You got to love that spot VIX index. That's got so many great tools that assist us in interpreting the market. If we take a look at so we got a rally going on. You got the Dow up 329, S&P 91, 530 for the Nasdaq 100, a little over 2% there. 34 bucks for the Russell, 28 for the Dow. Semis up 270. New York Stock Exchange is up about 92 points out there. Let's start. Where do we want to start? Let's start by taking a look at the, so we also know we were in the oversold condition. Let's go take a New York Stock Exchange. It's advanced client oscillator. It's making its way up to its zero threshold level right now, minus 19. If it closes above that today, that would be a positive, but closing above it today and tomorrow would be very positive. In the case of New York Stock Exchange, it ought to target its oscillator and change line currently at 21,321. If it's able to close above Friday's high out there, Friday's high, by the way, is 21,273.23, and we're trading above that right now. If we close above that, that's a bullish indication. It's the first time that we will have closed above the prior day's high since the high that was put in back on November the 12th out there. Spot VIX index had that one-day rate of change, as I mentioned, below minus 10%. You could get a second one today. Do you need two initiation signals to the upside? You do not. What we likely have out here is a spot VIX index. During this week, we are in a very favorable week for the equity markets out here. We'll take a look at that as well. But here in the spot VIX index, it ought to go target its 50-day exponential moving average. That is currently printing out at 1894. Let's go ahead and close that down. Let's take a look at the let's take a look at the daily equity future contracts. As I'd mentioned during the 11 a.m. update, we've got a couple new profiles. The actual truth is we have 4 new profiles that are attempting to form. Make sure you hear that word, attempting to form. We had new profiles on Friday that were also attempting to form. They did not come to fruition, not the way that these profiles have formed. Friday, we had a profile that was wrapping around the ES Minis profile. That's not the case. We now have a profile that from a directional standpoint is bearish. It formed below the prior profile, as is the case with the NQ and the Dow and the Russell 2000. Now, in the case of the ES Mini, we did close below on Thursday. We closed below its breakout level at 65.71. We closed back above it on Friday. That says it was false breakdown signal. Now we've got a new profile. If this profile does form or maintains itself, you've got support at 65.98. The center's at 66.72. The top is close at 68.19. That oscillator and change line will become a target. That's 67.32. That could or should be the first place to go short this market. But because we're in a favorable week, I would say price is likely to take that out and get up to a place to really short the market. To the extent that you want to do that, would be up towards the top of its profile. That's pretty near that descending trend line that we've got out there. So top of the profile, 68.19. That trend line right around 68.40-ish or so. If we take a look at the NQ has got a now all of these need bullish reversal candles not the ES Mini. The NQ needs a bullish reversal candle to confirm a Gartley buy pattern, much like the Russell 2000 did on Friday. We didn't get that bullish reversal candle. We are trading well above Friday's high. That's a bullish signal. We ought to go target its oscillator and change line right around near its center of its new profile that's attempting to form. So the 24,994, 25,035-ish area is going to be your resistance. And above that, you've got that descending trend line. That descending trend line right around 25,200. Resistance above that would be 25,358. If we take the Dow Equity Future contract, never even got down to test its breakout level, the TD knockout breakout level, new bullish profile. We're nearing Friday's high out there. So the Dow Equity Future contract needs to close above, not tick above, but it needs to close above 46,656 to give us that bullish signal out there that we're going to go head up to the oscillator and change line and the top of its profile. Top of that profile again, 47,141. Finally, the Russell 2000. Russell 2000, both the equity future contract and its cash indice on Friday forming Gartley buy patterns. Now, the Russell 2000 may be the one, believe it or not, that gives us the most important message. The Russell 2000 is on its way to the top of its daily profile. We're just a smidgen away from it. That smidgen is up at the price point of 24.1280. We're printing out right now at 24.0950 out there. Now, if price can close above that, I've drawn in a descending trend line as well. Today, that would, for example, get us up towards the 24.30-ish area. Tomorrow will be just a tad below that. So that's what's going on with regard to the daily equity future contracts. Everything here is bullish, especially closing. Well, let's go take a quick peek in at the cash indices out here. So let's put those up. Are we trading above Friday's highs out here? We are in the NDX 100. We are in the S&P. We are close in the Dow. We are in the Russell. We are in the semis. We are not in the transports. Transports got that nice big old consolidation pattern. We are inside the composite for both the New York Stock Exchange as well as the NASDAQ. So all of that looks pretty good. If we take a look at consecutive days, the upside today would be day number 2. We rally on tomorrow and Wednesday out there to get us 4 days into Thanksgiving out there. If we take a look at what the seasonal patterns are for Thanksgiving, let's go ahead and pull those charts over on our screen. This happens to be the Dow. Now, I've got 128 years worth of data, but only 83 events dealing with Thanksgiving. But here is over that 128-year period of time, and I don't know which of the 83 data points, but I'll go ahead and put some different years in here. You can see now the red vertical line represents Thanksgiving. So this shows us what the price behavior is 10 days before and 10 days after. The real bullish signal over 120 years is really the day after. It's not the day after, but, well, it's the day after Thanksgiving going on, for the next 10 days. At least that's how it was over 128-year period. But let's look at something more current, like a 25-year period. Here on a 25-year period, we're in a favorable season. So this is Monday. We've got Monday, Tuesday, Wednesday. Day 3. Here, day 3 typically is, it rallies slightly, at least up into Thanksgiving. Black Friday usually is a move a bit lower before we start to move higher out there. That's what it's been over the last 25 years. If we take a look at the last 15 years before we go to breakout here, last 15 years, this side, so we're not following this pattern today. This says we actually head down into Thanksgiving, and we do that until next Tuesday. Steve Rhodes with TFNN. We'll be right back. We'll take a look at NVIDIA, WBE, IOVA, WRD, and CNC. We'd love to hear from you as well.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I'm just letting these charts here populate as for a request from Marvin. It's for ticker symbol XRP. Hopefully, what's the deal here? Oh, it's waiting on me. Shoot. Probably should have just let it go. But what we're going to do here is we're going to take first a quick peek at the 30-minute time frame for the we're not going to get any data out of this. This is IPO from a couple days ago. Okay, let's first thing we're going to take our two 30-minute time frame charts, the ES and the NQ. Those are the most traded contracts out there, and I want to just share with you that you've got. Don't be careful going try the short side out here. Or at least wait for this 30-minute bar to complete it. At 12 more minutes from now. You look at the top row, you can see TD9 count patterns that went ahead and formed at 11 a.m. We are trading well above those highs. Anything could happen in the next 11 minutes out there. But assuming that it doesn't, those two have given you signals that this market wants to move higher, at least certainly for that time frame. If we go, I'm going to close this out. We go just take a look at the intraday charts out there for multiple time frames. We're going to see an A to B equals CD pattern to the upside. That too is in place and underway, and very likely where price is headed to. So I'll get that screen up on our charts, these charts up on our screen. Oh, that was not the one I wanted. Sorry. I needed this one. This will take just a moment to repopulate a different set of charts out there. Come on. Day trading. Here we go. Okay, so now I got the NQ chart. So we'll start with the NQ. You know, the only resistance level that I can see with the NQ, look, you're going to negate a 10-minute TD9 count top as well in the next in the next minute. You just did. So that negated its TD9 count top. This strong rally. Ordinarily I'd say 24,859.50 might be a strong resistance level. It's TD9 count breakdown level, but the reality is price was able to cruise that once before, so we're not going to go there. The A to B equals CD pattern. It's not going to be exact to the tick, but right around the 25,085 level, and you get 25,216 and 25,360. Those are the two TD9 count breakdown resistance levels that I believe are the ones to be paying attention to. Wow. However, Before we get there, you've got the center or the sell zone, perhaps, of that daily profile that's attempting to form. That's between the 24,994 and 25,358 level. So I'd say at this stage here, we're definitely headed up towards that oscillator and change line. That's a little bit above 24,994. That is the NQ. Let's take a look at the ES mini charts out here. The ES mini charts, give me a moment. We'll get these populated. Whoops, that would not produce the right chart. Right set of charts. Here we go. So we're going to see the same thing. I don't think I've got the A to B equals CD pattern drawn in here, but it is the exact same pattern out there. You can draw it in on your 4-hour chart, your 2-hour chart, whatever time frame it is that you want. There's an A to B equals CD pattern on the upside. Now, the 10-minute chart is not negated at TD9 count. It's completing that here at 11:30, so you kind of keep an eye out on that one. The 30-minute we've already discussed. You can see the A to B equals CD pattern even on the 16-minute time frame chart. We're above TD9 count breakdown resistance on that 120-minute chart, similar to the NQ that we looked at. This really suggests that we head up to its TD9 count breakdown level at about 6801. We had 6800 on the 5-hour, 6801 on the 4-hour chart. You've got 6732-ish is going to be that next real battle to the upside. That's the daily oscillator and change line. If you can clear that, you are very likely headed up towards 6819 before you'd really give any kind of consideration to shorting. So that's one thing to consider. The second thing to consider for the ES and the NQ out here would be the apogee pivot points. Those came in last Wednesday late in the evening is my recollection. So the numbers we're watching here for the ES Mini are going to be 67, 47, 25. 67, 47, 25. Put that down on your pad of paper there. That's a place where you could see resistant price turn down. However, price closes above that, and we are trading above the apogee pivot point for the Russell. In fact, it's acting now completely as support, not resistance, and the Dow Equity Future contract. So both of them have negated that. They are trading above that. I suspect that is where the NQ and the ES Mini are targeting, the NQ being 25,186.75. And we close above that. That is also going to be bullish and likely that we rally at least in through Wednesday out there. Friday can be somewhat suspect of a day. It's half-day trading, so the market closed at 1 o'clock on Friday. I don't believe that we are hosting shows that day. Okay, so I think now we're ready and prepared to go take a look at the requests that have come in. So let's go ahead and start that process. The first one coming in. Let's take a look at NVIDIA. This is for Joe. His question is buy, sell, or hold. So what we've got taking place here in NVIDIA is Friday, Joe, price closed below the bottom of its daily profile. That was a 180.30. Today we're back inside there. This is suggesting that Friday's move may, because the day is not over, may have been a false breakdown message. So in that case there, I certainly couldn't tell you to sell because all this is really was doing is consolidating with inside that daily profile, which is what it's doing inside the monthly profile. And on the weekly, the weekly profile, it's consolidating, and the monthly time frame, prices pulled back, found support at a oscillator change line. So that's bullish. The weekly chart is bearish to neutral because the Rhodes momentum indicator top, but nothing has been broken. If we were to see NVIDIA, Joe, close below 167.23 on a weekly time frame, then that would be suggesting get out of Dodge. I've got no idea where you're in with your trade, what the time frames were, and so forth. So just giving you the analysis of NVIDIA. If we do, and we are trading, what we're not doing is trading above yesterday's high, which is a bummer. We may not get up there today out there, so not really signaling that the rally is really getting ready to lift off. But is this a buy? We really let's do this here because I just happen to have those NVIDIA charts. That wasn't the intention, but let's go use them. So if there's a bottom on the daily time frame, getting back, there's no bottom pattern. Getting back to support can be a bottom pattern. I would rather, Joe, that this would have not broken through that profile support, but it did. If we take a look at the 15-minute time frame chart, there's a TD9 count bottom pattern out here. Price needs to clear the high from about 2:30 in the afternoon. That was on Friday, I believe, and that's up at the 184.56 to generate an A to B equals CD pattern to the upside. Rhodes momentum indicator bottom formed on the 130-minute time frame chart. 195 doesn't look like that's got a bottoming pattern. All right, so what do we see here? What can I provide for Joe? Joe, the number to be watching, I think, is going to come from the The first number is going to be coming from the 2-hour, which is really 195-minute, not 2-hour, but 195-minute time frame chart. There's 2 of those bars in a day. We have not been above the oscillator and change line since 12:45 in the afternoon on November the 3rd. Today's November 24th. I would say a price were to close above 183.32, even though it's 195-minute chart, it's telling you that it wants to rally further. That's a key resistance level there. So, and that number, by the way, is going to change. Right now it's 183 and 30. So maybe it's 183, 40, 50, something like that. Figure out how to calculate the oscillator and change line. Heck, I teach you how to do that. And it's a really important tool. In fact, many of you can just go ahead and put it on your trading system out there. So that's what I see when we take a look at NVIDIA, Joe. Hope that helps you out. Dan wants to look at WVE. Let's go ahead and pull those charts up on our screen. Whether or not we'll be able to get to this before we go to the break, we can at least begin the process. This is trading out right now at 745 and right into the sell zone of its daily profile. That is WVE. The sell zone on this, Dan, is between 733 and 749. So close above 749 today and tomorrow would be a bullish outcome. Where would price head to next? Well, the next level of resistance would be the weekly time frame, and that is going to be at 781. 781 is the number you need to see a weekly close above to tell you that its move is something other than a counter trend rally. Does it have to happen this week? No, it just has to happen. And on a monthly time frame, you're just trading back inside his profile. We'll finish looking at this. We come back from this break. Steve Rhodes with TFNN.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So to finish off WVE, this is for Dan inside the Tiger's Den. Dan, the 747, which is the bottom of its weekly profile, and 749, that's your tough sludging area out there. If you can get through that, then you got to deal with that 781 level. So you're up against strong resistance. When I look at the daily, so there's a daily swing point that was tested last week. That was a swing point from back on September 25th. That had volume of 1.7 million shares. It was tested several times, 3 times, with over that volume. So if it's unable to break above this sell zone on the daily time frame, I think we head back to test that swing point. What you'd really like to see, since there's really no bottom pattern out there, is a test and rejection of that swing point with less than 1.7 million shares. And it could just be the high at 678, or it could be all the way down to low at 657. So that's what I have when I take a look at WVE. Hope that helps you out. You also want to take a look at IOVA. Let's go put that up on our screen out here. IOVA trading out as we speak right now at $2.50. Nice rally there. Headed up towards the top of its daily profile. That's at $2.54. Now it's trading into a swing point from back on the trading session of November 11th. 27 million shares traded hands that day. In 2 hours of trading, we've done 5.8 million shares. So we're at about an 18 million share going into 26 million. So you're coming in light in the loafers. Doesn't matter. You got resistance at 254. If you do close above that, you should go on and test that high, although it is not confirmed that you would do that from a volume standpoint, 274 being the high. With the weekly chart being above the top of its profile, that's why I lean towards being able to do that, volume or not. The monthly time frame chart, we are trading below profile support. Let me just make sure of that. Yeah, 472. So that would be a resistance level on a rally, 472. So daily time frame, just a consolidation with inside that profile. But again, if you close above 254, you should head back to that prior swing point, and that's where you could form an A to B equals CD pattern to the upside. You just simply need a close above that B point, which is 274. And again, you'd like to see that with more than 27 million shares. So hope that helps you out with that. Let's go take a look at WRD. This is for Duncan Steve inside the Tiger's Den. WRD trading out at $8.07. It's confirming a Rhodes momentum indicator bottom pattern for its daily time frame today. What you'd like to see this do, it's rallied right into where a counter trend rally would come to the end, Dunk, and that is at the top of the, or at the center of its bullish structured daily profile. That number being 818. You're looking for price to close above 818. It'll tell you that from a daily time frame, this is more than a counter trend rally, and instead would then tell you that WRD, we'll just have to call it world, not weird, would be headed up to $10.04 out there. Now, in order to do that, it does look like the weekly oscillator and change line is being a little stubborn person out there, and if you can get above that, we're trading into it right now, 813, that would be another bullish outcome. So what you're looking for on WRD is most certainly a close above 818 on the daily time frame. If you get that, you likely should see a further rally, with that price target being $10.04. Let's go take a look at CNC also for Duncan Steve. CNC is trading out at price point of $39.53. So this is having a stellar day, a gap to the upside, taking on a swing point that could trigger an A to B equals CD pattern for the daily time frame that takes you back to October 7th, 2025. 12.6 million shares traded that day. We're up with 7.2. Now you got the volume moving to that swing point. The key here is, can it close above its high? The high being 39.28. We're at 39.25. You close above 39.28, you got a big old A to B equals CD pattern to the upside. I'll draw that in on the weekly time frame. The weekly will have to wait till Friday to make that determination, but it's trying to take out its TD9 count top, so that would be a bullish signal. Let's see if this will allow me to copy and paste. There we go. This way we can give you where that price projection might be, up around the 47 level, 47.16 or so. The weekly time frame chart has volume of 55 million shares, so you're off to a good start today. So you'd love to see, again, this close above 39.28. You'll get a daily, maybe a weekly A to B equals CD pattern to the upside with that 47 area. You've got monthly resistance Two levels, 41.77 and 44 and change. The change part being 40 cents right now, but that number will change because that's the oscillator and change line. So that's what we see, Dunk. We take a CNC. Hope that measures up with what you were looking at as well. Mohammed writes in, and Mohammed would like to take a look at CDNS. So let's get its screens up on our chart out here. Right now, trading out at 304.10. It has a TD9 count weekly bottom that formed on Friday. That pattern will complete this week. What should then unfold on a weekly basis is CDNS should rally towards its oscillator and change line. And it will likely try to do that. However, it's got some battles. So, Muhammad, on a weekly basis, your first battle to the upside will be 311.90. Your second battle will be 326.25. That third battle would be at the 340.59 level. The daily time frame does not show anything of significance out here. Nothing bullish, that is. Just one more second. Let me see. That could be a wave 7 signal. Let me see. It is. I take that back. You're going to get a wave 7 bottom signal today as long as price doesn't take out or test Friday's low. We're well above that, the low being 295.18. Okay, so that's the first session. So you got a bottom. Now, what's that bottom going to do? It's going to go rally up towards resistance. The two resistance lines are at 306.66, and just above that is the oscillator and change line. The first was the bottom of its daily profile. If you can close above that, then we should make a move to its sell zone. Sell zone established by those profiles between 316.73 and 319.24. Monthly time frame, we're trading back inside its profile. Not ideal, but I don't think it's a monthly that is driving the train here. I think it is the weekly, and let's see what the daily can do out here. So you're first looking for a close above that oscillator and change line. Hope that helps you out with regard to CDNS and Marvin's for the next one. Mohammed, thanks for writing in. Marvin is interested in taking a ticker symbol XRP. Let's pull that up on our screen out here, looking for a bottom. And nope, we can't get that. That is just traded for 2 days out there. So maybe that's an ETF for Ethereum. I'm not sure, but let's go take a look at Ethereum, which is also what you wanted to take a look at. And we got the December contract up for Ethereum. And what we'll see here is the daily time frame chart last Friday formed bar number 7 of a TD9 count. You need to see a tick below Friday's low today, tomorrow, or Wednesday. If you're to get that, then Ethereum would give you a TD9 count bottom. If you don't get that, you got no bottom at all, at least not at this stage of the game out there on the daily time frame. The weekly time frame is really the same kind of setup out here, and that setup is you formed bar number 7 last week. So you got to get below that low of last week, this week, next week, the week after, potentially. So I don't see a bottom pattern here in Ethereum at this moment in time. You really need to wait to see how these patterns unfold. They may not unfold at all out there, but that's the best thing, Marvin, that I've got for you with regard to, well, nothing on XRP, but with regard to Ethereum, you're really waiting for a bullish reversal candle to confirm a daily buy, the D point bottom. The weekly time frame chart is waiting for, I don't know what it's waiting for. Well, a bullish reversal candle as well. Steve Rhodes with TFNN. We'll be right back. We're going to look at the APLD, and that is for Bob in Spokane. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the daily, weekly, monthly charts for APLD up on our screen out here. Forms a TD9 count top. Goes ahead and forms that on October 13th out there. That form turns into an A to B equals CD pattern to the downside. We still don't have the bullish reversal candle to confirm that bottom. What we do have, though, is price is trading above the center of its bullish structured daily profile. So, Bob, the first thing you're watching for today is a close above 23.22. Why? We traded below the bottom of its bullish daily structured profile for 2 consecutive sessions out there. So if this is going to prove itself to be more than a counter trend move, we would see a rally up towards 23.22. And right now we're trading at 23.57. The next area of resistance, assuming that holds, would be its oscillator and change line. 25.69 is a print right now, somewhere around that level. And then you've got the top of its daily profile at 27.23 out there. So again, no bottoming pattern out there. A bullish reversal candle would confirm that. The weekly time frame shows that we are trading with inside its bearish structured weekly profile. And if over time this could take us down to 1586 profile support. Finally, when we jump to the monthly time frame, the monthly time frame chart could be forming a sell the D point top. And if so, that would suggest that price wants to pull back to its oscillator and change line, currently printing 1677 out there. So, of course, that's going to require us to get below Friday's low out there. So APLD looks like right now this is more than a counter trend rally. That does not mean it's bottom, just means that it's more than a counter trend rally, and that we could get a 4-day rally up as price approaches the top of its daily profile. That's at 27.23, Bob. So hope that helps you out, and thanks so much for your request. Greg writes in, and Greg would like to take a couple of symbols out here. GEHC. Let's get that up on our screen out here. GEHC is trading out at 78.57, a stellar 5 sessions out here. Straight line move right to the upside, right into its TD9 count top. So, Greg, this forms a TD9 count top, which is a swing point out here back on October 28th. The volume on that swing point was 5.8 million shares. We're trading inside it right now with 1.3 million shares. So we're trading that swing point with lighter volume. As this approaches its TD9 count breakdown resistance level, 78.68. So this may be getting ready for a bit of a pit stop up there. Maybe it's going to go take it out. It looks to me more like a sideways consolidation pattern than anything else. What do you mean a sideways consolidation pattern? Well, let's open it up. Let's move it sideways. out here, we're going to see, oh, yeah, it's a good old-fashioned consolidation. In fact, we can take this one back even further than I thought. So let's put up that little rectangle. What was that, Control 8 or something? Where's the rectangle? There we go. So we'll just start it here. We're just going to do the conservative version of this. And you can see the bottom, yeah, pretty much really right around there. So it's quite a consolidation. You're up towards the top of it. Don't know whether it'll bust through it. Doesn't look like it, or at least not today, because we don't really have the volume to suggest that that's going to unfold. With regard to the weekly time frame chart, you can see the sideways consolidation out here. And on the monthly time frame, you're trading above, you're trading inside his profile. Support at 76.51, a sell zone between 84.53 and 90.54 out there. The weekly chart is fine. No real signals out here that are bearish on the weekly time frame. So it's all about the daily, up towards the high out there with lighter volume out there. I don't think it's getting ready to take out the consolidation just yet, Greg. You also want to look at BBD as well. Let's pull that set of charts up on our screen. See what BBD is doing. It is trading out as we speak at the price point of $3.51. It's going to form on Friday a monthly TD9 count top. It'll complete that pattern in December, but that doesn't mean that we would see higher highs. The weekly time frame chart has a Rhodes momentum indicator top. That formed on Friday. Now, what price did was it found support at its oscillator and change line. So the weekly signal out here, Greg, is neutral. But if we close below the oscillator and change line, right around 348, I'll give you the exact number. Right now it's at 349. I think 348. It's a good number. If we close below that, you have a bullish structured weekly profile. And with the daily being below profile support, we may be just getting in BBD just a couple day rally out here, 2 to 4 day rally before it decides to resume its move lower. Now, what you're really watching for as far as a resumed move lower would be a close below that oscillator and change line. If we were to do that, that's going to likely take us back towards the 311, 319 level out there. Not much else that I can see out here, Greg. That covers the daily, the weekly, and the monthly time frame for BBD. Best of luck to you. On Friday, Vic got into the instrument PWR. So let's go take a look at what Power is doing right now. PWR is trading out at 444.85 out there. It's trading with inside its daily profile. That daily chart shows a Rhodes momentum indicator top. The weekly, a TD9 count top. The monthly, not much. So on the daily time frame out there, we just have a consolidation with inside its profile. Price running into resistance right now. That green oscillator and change line. We're printed at 444.85. The oscillator and change line is at 444.42. So as long as price remains above that, the 42 level, 445.42, we ought to get to 456.86, the top of that daily profile. The weekly time frame, again, a TD9 count top, a sideways consolidation with inside profile, nothing broken there. The monthly time frame looks good. Your question was, what do we think about your buy? I think at this stage, I'd stay with it for today. I'd watch that. I might put in you got to watch volume. So the volume on the swing point that is going to trade into, likely, October 31st, 1.9 million shares. Today so far, 234,000 shares. So you're coming in with much lighter volume, Vic. I would have my sell order in, because you can always jump back in out here. But I don't think it's going to be able to bust through these highs. 456.86 is your TAS market profile resistance level. So I'd probably put it in just below that. The reason I'm suggesting that is you've got that weekly TD9 count pattern out there. Now, that pattern hasn't proven itself to us because it hasn't been able to even, well, it did close below its oscillator and change line for 1 week, 2 weeks out there. Well, yeah, I still want to go with this really over time, this may want some lower price out there. So, Vic, I hope that helps you out. And thanks so much for taking the time to write in. I believe that is all the rest of the questions. I was just looking inside the Tiger's Den. I don't see anything there. So what we'll do is we'll go, I don't see anything by email. So let's just go take a look at the Carvana. There we go, ELO, CVNA. So let's get CVNA up on our screen out here, see what Carvana is doing. It's not a model that I understand, but I don't think that model is intended for someone in my age category. I like to go kick the tires, not just have the car delivered. Although I did buy a car. I've purchased cars online, used cars though, not new cars. And I don't know, guys, Carvana do used cars too, or are they just new? I don't really know. In any event, if we take a look at Carvana out here, right now what it's doing is trading above the top of its daily profile ELO. That's a bullish thing. You'd love to see it close above 329.78 today and tomorrow. That would give you a bullish profile change in trend. What would that do for it? Well, it would suggest that we rally further. The rally further ought to take us up towards the 354 level. That's the weekly oscillator and change line. And above that, 377. Do we have a weekly bottoming pattern? The answer to that question is no, we do not. Do we have a daily one? The answer to that is we do. We've got a by the D point bottom pattern there. So the key level to be watching here is going to be that 329.78. If you close above that, that would be a bullish outcome. It ought to suggest rallying up towards the 354 level. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got a couple of requests that have come in. We'll try to get to those. We'll get to those quickly here. The first one, BBD, is one I've got up on my screen. That's one we're going to go with out here. No, that's not it. Wow, that didn't change. Son of a gun. The first one's going to. Oh, or did I mess up? SMHs, okay. So Duncan wants to take a look at the SMHs. The SMHs on Friday pulled back, tested, rejected their TD9 count breakout level. Looks like they are forming a Gartley buy pattern today. Got a three-river morning star. Price is traded above the center of its bullish structured profile. Steve-O, if price closes the day above 338.38, you should see a run to 345 and change. That's the oscillator and change line. And above that, 356.91. The TD9 count on the weekly time frame chart, just a consolidation with inside its profile. The monthly on Friday could form a Rhodes momentum indicator top out there. So you do got three tops right now. Not the four tops, but you do have three tops inside of the SMHs. But you should see a rally for, I would think, a couple of days out there. Let's go take a look at a Micron. This is for John inside the Tiger's Den. And John, here what we've got is, what do we have? You've got a daily Rhodes momentum indicator top with price rallying up towards resistance. That first level is going to be the bottom of its daily profile, 225.33. It should be able to get there because on the weekly time frame, price pulled back, found support at a oscillator and change line. I don't see a topping pattern on the weekly time frame. So it was really the daily that was driving things. The monthly for Micron does not have a topping pattern either. So it's really all about the daily time frame. The first next important level, 225.33. That is for Micron. The last request was a take good Oracle. Did that get in there? There we go. So we take good Oracle, daily time frame. I see an A to B equals CD pattern to the downside. No bullish reversal candle. Trading below its profile support and its oscillator and change line. The daily says lower price. The weekly, John, we are trading below profile support. Its oscillator and change line. That's signaling lower price. Now, we have traded lower for 1, 2, 3, 4, 5, 6. Boy, this ought to get a little bit of a timeout. That's a long time to the downside on a weekly basis. In the monthly chart, we're trading below its oscillator and change line. The Oracle is looking really like it does want to move a bit lower out there. Folks, stay tuned for all the great programming. I'll be back with you later this afternoon with Tommy, right around 3:15, and tomorrow at 11 a.m. sharp. Have a magical and marvelous Monday. Thanks for joining me. I look forward to seeing you again soon. Take care now.